All right. Hey guys, I'm here with Russell, one of my associates, and we were just talking about the market, of course. As you can imagine, it's literally shit the bed, pardon my French. And so a few things right about this. Obviously, I've got this indicator here. It's basically a linear regression indicator, LINREG, and it's clearly pointing down. So let's talk about this. In a way, I think this is quite positive because nothing's really positive when the market falls off the plate like this. But as you can see here, there's a support zone here around 42, and it bounced back immediately. But I tell you right away, this might not be the end, be all and end all of it. It might, it has bounced back, and that's quite natural because there's always some dip buying going on. But I feel that it's probably going to keep bouncing around here for a while. I think when you see this progression here, right from the top, actually Russell just mentioned Dow theory. I was talking about lower highs and lower lows, right? As you see the sequence here. And, I was actually sleeping when this happened, unfortunately. Scott wrote about it, and he shot an email out, and I'm probably going to follow suit a bit later and also include a link to this video. But I just want to kind of, from the top of my head, take a look at this and speak about it, right? So when you see this progression here, right, in terms of psychology, everyone expects it to bounce back like about here, right? And then, as you can see, right, this spike high, right, see that right here? It doesn't get breached, and it stays really, I've been watching this, this linear regression channel, which I normally don't really put much value in, but it starts kind of dropping and dropping and dropping. And then this is really where it kind of dies, right? When I was basically, went to slumber last night, I saw this and I thought, okay, it bounced back. It's probably going to hold because just look at the time, right? If you go and forward a little bit, let me scroll this here. Right? There. So, human psychology, right? Before you see this, if this doesn't exist, the next candle, this looks like a nice little, snapback, and say, okay, we're good to go. And it's going to bounce back. Looks pretty bullish to me. What do you say, Russell? Does it look bullish to you?
Yes, it looks like it's, in the zone it looks more like what I call sideways motion, which, always, comes before it goes back up.
Well, the long spikes, a little bit of what do you say, barbed wire tape here. And, it's just basically volatility trying to figure out which way it's going to snap. Unfortunately, it went this way. And, this is no surprise. And I'm going to be buying here. Absolutely. Because that's something, again, Russell and I were just talking about this. And I'm like, I'm definitely going to buy here. Russell said, yeah, me too. And the thing is, most retail clients don't want to buy in a situation like that. And it's just human psychology. And why? Because fear, right? It's what drives us in this kind of situation. It's really motivated by fear. It's a normal fight or flight psychology that applies. And also, a whole slew of cognitive biases that kind of kick in, because when we see red tape like this, 47.6, and we compare that where we just came from, and we've lost money, right, at that point, obviously, we experience a lot of pain, and we're trying to figure out, we're processing that, and we're trying to figure out how we're getting out of this pain situation, how we're trying to, alleviate that pain. And everyone responds differently. Some people are more resilient. Some others really are gripped by fear. It might be also, you might have invested too much, that money you cannot lose, so I didn't want to really lose. And so your psychology is processing that. And whichever way that happens, the end result is that I think a good 80 to 90%. And I've been in this game for a very long time. And you guys know me. I've run Eagle Speculator for over 13 years, and I've seen these dips over and over again in all kinds of markets. Most people seem capable of buying there. And I'm not, by the way, like advocating that you need to buy right now. I'm just telling you that I will buy quite a bit of Bitcoin because this is a good spot to do it. Fully well knowing that there's a good chance it might drop lower. And if it drops lower, then we basically have to ask a question. And I think there's the key question. That's when I said to Russell, you know what, I'm just going to record this conversation because I think it's a good and valuable one. The key question we need to ask ourselves at this point is, okay, what are the implications if we drop much lower? Let's say we drop into, I mean, if I buy at 47.5 here, whatever it is going to be, and it drops to, let's say, 45, okay, I'm sorry, to 45,000 or 42,000 or even, maybe 40,000. Do I really care too much? I personally don't. You might. But the consideration here is really what are the longer term implications? Because more short term, this hurts and this is scary. But long term, if this market completely wipes out, well, what are the long term implications? Right? What are the implications are that, well, we're hitting a new bear market. We might be hitting 30,000, 20,000? What's it going to be? That really would be a full-blown bear market. Right? And in that case, well, it's going to be over for quite a while. So in the odds for this happening at this stage, what are the odds? I think they are worse at this point, at least, of the current price action. They're worse than 50-50. And so I have to swing towards the more bullish scenario, the hypothesis that supports a snapback, and most likely, and I'm not going to sugarcoat this for you guys, okay? Most likely, actually, this is actually quite good that we have this. I don't really like using indicators very often, as you guys know. I just had this on by accident when I was looking at this chart. But most likely, if the most bullish scenario in my mind right now is actually it comes back in here, maybe goes here and then kind of bounces around here for a while, scaring the children more. And then, hopefully escaping at some point down here and bouncing back up. But yeah, no, this is not going to be completely painless. It's not going to be like, the odds of this happening that you buy right here and it's going to snap right back to 54, 56, maybe do retest and go right back up. That is the most, I don't know if I can draw it. Let me see here, right? Something like this, right? And then maybe something like this and this. This is the best case scenario, right? Most likely, did you see that, Russell, when I was drawing it? No. Okay. I think it does go into recording though. So I hope it does. Otherwise, you just have to follow the way that I move my mouse. Most likely we're going to see something like this. So I don't think there's a particular rush in loading up here, right? But I'm just going to do it and then, see what happens. So let's take another look. Of course, I wasn't in Bitcoin, by the way. I was in mostly at least in my cryptocurrencies account in Ethereum. Let's take a look at that one. And yeah, it got hit, but you can tell a lot less. So yeah, we took some damage, but we took a lot less damage than everyone else. And this is actually quite positive. You can tell the LINREG, linear regression. I don't know for you guys who are uninitiated, by the way, linear regression is basically, a slope function. And that's quite simple. And I hope you will be able to see this when this actually, when this becomes a recording. So it's more like, something like this. So quite a nice line. This would be this is a natural line you would draw, right? As a human being, or even like give a 3-year-old a child, a crayons or something, and say, kind of draw a line here that follows this shape, right? The kid probably doesn't know this is price action, and it would probably draw something like this. Well, this is based on a formula, and it's it all comes down to coefficient determination of goodness. It's goodness of fit, and this goodness of fit is basically based on just trying to find a trend, a trend. It's a mathematical formula, and I wrote some articles about it that defines, in this kind of, if you're drawing this box here, right, how it fits in, not only what the slope is, but also where it attaches. If the price action would be, let me redraw this. Let's say, and I would draw, let's say, I don't know. Like this. I really hope this shows up. So basically, I draw it again with my mouse in case it doesn't show up. Coordinates are like this. Well, then the function would be more like here, right? So the slope would be like here, and it would attach here. So that's basically, And then what it does, basically a linear regression does, it compares with what the average would be, because if you draw a straight line through all this, right, we would be somewhere here, right? So it compares that and it comes up with what's called an R, R2, R squared, right? Which is basically the goodness of fit. It's like a value, like 0.8 would be, 0.9, it would be a pretty good fit. But if it goes to like below 0.5, it's like a pretty crappy fit, right? So anyway, oops, sorry, wrong key, pardon me. How do I do this? Okay, so that's why we use linear regression. Linear regression gives an idea, and I use kind of a 20-day window here, and it seems to work very well. Anyway, so clearly, right, Ethereum being the strong of it. So if you were abiding by cryptonescence, you were sitting in Ethereum, yeah, you took a hit, but a lot less than anyone sitting in Bitcoin. And by intents and purposes, we're almost back to where we were like on November 26th, pardon me. I mean, that's pretty nice. So, we can make, there's a choice to be made here. Do we stay in Ethereum and support the stronger one? Or do we expect a bounce in Bitcoin and drop into that now? I personally going to take some of my risk assets and drop it into that. I'm not going to touch my cryptonescence account. I'm quite, just to point that out, I think that's important, because a lot of people are like, oh, what should I do? Should I convert everything now? But cryptonescence says we should be in Ethereum. Dude, if you trade cryptonescence, you stay in cryptonescence, meaning you right now stay in Ethereum. That's what the system says, and that's what we trade. But if you have risk assets, which we all do, and if you are like an altcoin mastermind, which is the group we're running, Russell can speak a little bit to that. Russell, want to talk about the altcoin mastermind for a second, for other people who I'm not familiar or have been ignoring our annoying mailings.
Yeah. So yeah, it's like there are kind of two sides. With markets, they go up and they go down. That's yeah, I know that already, right? But
no shit, Sherlock.
Yeah, exactly. I said that in one of the emails. Yeah, it's kind of a sideways. It can go either way. Is what I was getting at. And so the idea is, you can't be what I call a fair weather trader and say, well, I'm going to do this one way when the market's like this and one way when the market's like this. You have to kind of hedge both sides of the bet, as they would say. So, you have the system with a cryptonescence report, and then, there is a weekly microcap altcoin call as well that's been introduced, and has a really nice portfolio. It's, the closed trades are at over 700% so far. And, coins are added, pretty regularly. So, it just gives you, a little more upside, even when there is volatility, because these things do move differently, the different types of coins. And that's why, the system identifies that there are different seasons. So the microcap altcoins, they just give you a lot more movement. They give you that, they have that built-in possibility, because they're not sitting at, $4,000. They're not sitting at, $40,000 to $60,000 plus. Like a big.
They're more like crapshoots, really. We really grab them when they were still young, and that's where we were making a bet on them to do 10x's, 20x's, 30x's, which would be a ridiculous thing, a ludicrous thing to do with something like Ethereum or Bitcoin and everything. And with cryptonescence, we obviously have the seasons, and we only trade those in an automated way, right? Which is completely automated in terms of the criteria, which also, by the way, relates to this, right? We, if you're looking at, I don't know, let's look at somewhere like, for instance, I don't know, just Woo, right?
Yes. Yeah.
And I actually host Woo. Woo obviously took a dive here. I'm actually still holding some of that. And this happens, and there's a lot more volatility, and that shows it right there. Look how much more risky that is. And when you hold something like this, you don't want to hold it with your main assets. It's really play money, and you kind of got to play the swings. And for us to make this a weekly trading system would have been impossible. And so that's why, Scott started this, and then we followed suit in terms of the microcap, a microcap altcoin mastermind, right, Russell? because it's really well like in and out, and we trade it as we see it in a more what's semi-automated. We do run some quant research, but also then pick them as we see the price action, right?
Yes. Yes. And so, it gives you just I call it like an insurance policy, for little moves like this. And, I've been, trading the systems, both of them now for about 3 months. And in that time, I've been able to triple, the size of my account. And I'm not a trader, by the way. I'm very amateur. Michael and Scott are, the experts here. I'm just an amateur guy, but I'm definitely along for the ride and excited about it, and starting to learn a lot, actually. And this was kind of the first time where, when I saw this action, because I was awake because I'm in the US. So I saw when this happened, like I just happened to pick up my phone and look at my, portfolio for a second. And I noticed 2,000 down from, earlier today. And I was like, oh, okay. So it had already made it past a limit that I didn't want to go to. And so when I saw it go another 1,000 within, a very short period of time, I ran back to my computer and did a little bit of, finagling, a little bit of moving around with it. So.
Yeah. Well, by the way, he said, Michael and Scott are experts. And honestly, I mean, the thing is this, trading isn't that difficult, honestly. And it's kind of like with martial arts. I've trained martial arts quite a bit in my life. And so did Scott, by the way. And it's kind of this round circle thing. And there comes a time where when you learn to trade, and of course there's a lot of mechanics and a lot of mechanical things, like when you play the piano, right, where you have to learn how to trade, and that you're gonna go through the motions, and you might make mistakes, and we're always gonna make mistakes right here and there. And as you become more of a serious trader, you cannot come full circle. And when you become really experienced over time, and you learn more and more about this, right, there comes this threshold at this point where you actually kind of like start believing your own bullshit, right? And this is really dangerous. And it's something I kind of pass through. And I think everyone does, right? And when you start making these, you're drunk with power and you think you can read the market, and then boom, right? Something like, something not unlike this happens, right? Boom, right? It's like, and you think, why didn't I predict this? Well, okay. Had I been awake last night and I had seen this drop here, but I guess I could have made that call here when it dropped the first time. But, honestly, you're never, ever safe, I mean, that's the thing, you might be the biggest market guru, and I've made some good calls in my life, absolutely. But, in the end, we're all subjects in this market, right? We're all rolling with the punches. So it's, just so when you guys take pain, I take pain. Absolutely. I get hit as much as, because I do exactly what the system says. And I hope you guys do too, because over the long term, that's really the only way. Some might say, well, but I did this and this, and I dropped into USDT right here, and look at me, I'm a hero. Yeah, but you're going to do this maybe another time, and next time you're going to get hit, and you are going to miss on the big snapback that really saves your account. That gains it back and then some. That actually has happened over in June, when crypto was testing on metal, right? Again, and I have talked to a few cryptanalysts subs at that time who didn't stick it with the system, and they got hit hard, and they just now, when we're hitting like the 50,000, so recovered. And that I find that tragic, because I've made it really a point to say, guys, stick with the system, because that's really the only thing we have. Because a market like that, let's do this, right? Let's go zoom all the way out. Okay. Do you really think you would have been able to call the swings, Russell?
No.
Yeah. Right. I mean, we can do our best. We're doing a lot of quant trading and a lot of research, and we're running simulations all the time, and we're looking at so many alpha factors. Alpha factors are basically, things that give us edges, right? Measures that give us edges. Might be statistical, might be, some people use fundamentals, right? But might be correlation measures, might be price pattern based, who knows what. But, we're looking at so many things, and in retrospect, you can always come up with something, draw lines and draw whatever, draw around on your chart and think you've nailed it. But in the end, look at this market. This is crazy. Okay, I mean, like especially if you go to a monthly, right? Okay, let's zoom out here. It's going to change it. Well, I mean, that's actually a good one too. A nice coincidence. See, that's what the trend is. I think that's actually maybe the best thing that happened during this whole conversation, Russell. Don't you think? Look at this.
Yes, I started to smile a lot more.
See what I mean? See what I mean? So actually, let's circle back. I'm sorry, I'm rambling a little bit here, and but I love doing this, and I think it's actually sometimes useful because you kind of like see my thought process. And forgive me, I just hit some caffeine and I haven't had breakfast yet, so I'm gonna go. So this is really great here, and the question goes out to you guys too. What do you think? I mean, are we gonna like drop through here and it's all ends and we're because this is a quite a nice channel up. I mean, again, all lines we draw imaginary on any chart. Okay, just to be clear, but this right here looks. This is the trend, I think, that we're following. Okay, right here, this is what you're seeing, right? This is the vision, okay, of where we think the destiny of where crypto in general, Bitcoin, is going. And let's take another look at the other market. What is it called again? Total 2, I think, right? Is that the one? It never can find it by itself. Yeah, that's actually the entire crypto market right here. Shall I sell more? And with that in mind, with this chart in mind, that's how I usually operate. I don't look at this necessarily every day like this, but I think this was really nice coincidence actually. That this, that I pulled this up and it had this indicator on because I think it shows really like the trajectory, and that's why we're doing what we're doing, right? And I think my job is not be the guru. I think my benefit is having done this for 13 years. Or more. I mean, I've been training since '99, but like professionally since 2008, and having been through so much price action that I really learned how to focus on the long term. And so to that end, for me, the question right now is, what are the odds of the entire crypto market really dropping through this and this whole channel going sideways and we're going nowhere, right? And we're just going to sit here forever for a year or two and do nothing. I think the odds for that are pretty bad still. There's no crystal ball, but I think in the end, we're in a bull market in crypto, and that's why like old Turkey. If you read Russell, help me out here. I'm always bad in names. From the 20s, the trader. It's funny. I remember old Turkey, but. What's his name again? The old stock trader from the 1920s. I can't think of him right now.
Kind of talked about when there was blood in the streets.
No, that is blood, and when there's blood in the streets by property, right? That is Rothschild. Rothschild said that. I think around the time when he was pretending to when he had when he circled reports that Napoleon had won. So that was I can't believe he got away with that. But that game has being played a long time. No, I was saying that the reminiscences of a stock trader. God, what's his name again? Reminiscences of a stock trader, or something, right? That's the book. Yeah, of a stock operator or investment.
Oh yes, I've heard of it.
Edwin Levere, yeah, who wrote that. So basically, right, when he was in the book, right, he was talking about old Turkey, and and old Turkey basically kept repeating, but it's a bull market, and that kind of, I read this a long time ago, and I always remember that, because that means to me, keep an eye on the big picture. Don't get really faced by the short-term picture too much. Right? Just keep an eye on the big picture and operate on that premise, because if you're always focusing on the short-term picture, then you will be reactive. And the biggest thing that can kill you in a market is being reactive.
Yes, and that goes back to our minds being wired incorrectly, because, and it's not even, it's incorrectly for the time we live in, because, you know, we're hunter gatherers, you know, that's what we were made to be. And trading, you know, it's like it throws all those rules, you know, out the window. So that's why it's so difficult to do the opposite, really. You know?
Yeah, it is, because it's we you know, we're primitive beings. You know, with the reptilian brain that we really are operating on more than we, you know, 95% of the things we do are in life every day. If you, the second you get up, it's all habits, right? And so we have all these ingrained habits and also natural dispositions, inclinations that we immediately resort to. So everyone is wired differently. You know, when I see charts like that, I don't sweat much anymore. But you know, I've been through the motions. And so coming back to what I said before, my job really is to kind of keep you guys on the keep the eye on the ball, as for everyone. You know, kind of make sure, talking people off the ledge sometimes, because this market, and I've said this from the very beginning, since we started introducing cryptocurrencies, this market will press your buttons. Okay, it will work you, and it will scare you know, the living shit out of you. And it's not going to do this only once. It's going to do this probably 10 times in the next few years while we're on this journey together. Okay, and so that's something you have to be mentally prepared for. Okay. And I have to be honest, I checked my email this morning. I didn't get any angry or fearful emails. So I think the crew we have on right now is really has grown a lot with us. But as we bring people in, I think it's a message that we really have to keep repeating, because it's really important. Because that's really beyond all the technicals and all the, you know, the mumbo jumbo and the, you know, the quant trading lingo and all the magic that might happen behind the scenes. You know, we're all human beings and on this ride, and that's really what we need to focus everyone on, because that's how you get shaken out, through fear, through your you know, having your buttons pressed, so that you take action that is on a long-term basis is detrimental. You agree, Russell?
Yes, I do. And just one final thing to pass.
By the way, Russell is a tank. I mean, he might have only traded. Sorry for interrupting, Russell. I talk too much, you know. Blame the coffee. But Russell only been, you know, trading crypto for 3 months. But you know, I talked to him this morning. He's like, yeah, okay, yeah, I did this and this. But I mean, Russell is cool as a clam. You know, I have to give props to you, man. You have a good dispositions for being a trader.
Well, thank you. I hope I continue to learn, and I learned even from this movement right here. It was a very important lesson, because I didn't do a couple of things that I should have prior to it, that now, from now on, you know, I'll be more careful, and I will do. But I was going to say, like, one great thing to back this up is, you know, what's the very next move for smart money when they see this level? Like, if you and I are saying this, what are they going to do?
Well, the whales are going to do, right? Exactly.
What are they going to do? And then what is that going to cause the market to, how is that going to cause the market to react?
Exactly. Yeah, we're definitely going to look at whales accumulation, and I could check all this right now over Glassnode and CryptoQuant, but basically, the whales are always buying at these big dips. It's happens every time, and I don't think this time is going to be an exception, because no. I mean, you know, these things, it just slipped on a banana peel. And also, I think Scott's email that he sent out last night was pretty insightful in regards to, you know, it triggered moves like that. And remember, guys, we're not in the same crypto market anymore, well, a year ago or even 6 months ago. There's a lot more leverage going into the market now. We have futures, right? We have more ETFs, and people get levered, and people have stops now. You know what I mean? That wasn't really the case. I mean, a year ago, we had a completely different marketplaces today. And so the marketplace we're operating in is becoming more and more reminiscent of, much more, the way it moves and the way it operates, it's becoming a lot more in line, falling a lot more in line with how traditional markets work, like, you know, more leveraged markets, futures markets, forex markets, and stock markets, of course, right? So, you know, we're starting to see options as well. So a lot of people are going into derivatives now, And there's all kinds of things going on. The complexity and that complexity also there's like FLAs, and things like that. FLAs, flash loan arbitration. I mean, all these things, they have an impact, right, on how the market behaves as a whole. And people were wondering, a few months ago when the futures started trading, and then options, et cetera, how that would affect the market. And of course it affects the market. Does it affect the upside? No, but it affects the type of moves we see, and volatility will probably be with us for time to come. But the reasons why these volatility swings happen, I think that's the point I'm trying to get to, they differ. Before, it was more an expression of illiquidity, right? Where we had these big moves and swings, right? By all intents and purposes, if you didn't know this was coming, this was pretty crazy here, right? See down here. And then, here we have got a nice, beautiful bull market if you really consider, right? But I mean, this is crazy, right? I mean, we've been through quite a ride in the last 2 years. And maybe here, right, there was still a certain extent. I mean, there was like 180, I think like a year ago or so, the entire crypto market was 183 or 186 billion. Now it's like 2 point something trillion. It is
the other night, yeah.
Right. And so,
yeah.
What were you saying, Russell?
I said it was almost 3 trillion. It was like 2.7 trillion, and it did over at one point, probably around the 15th of November, or maybe between Halloween and the 15th of November.
Yeah, I should say, by the way, Russell might be a novice when it comes to trading, but in that respect, but he actually wrote a report on that recently, and that's why I actually quoted that number. So Russell was the one who did a little bit of a market research on that, and so that I found that really stunning. I had no idea.
Yeah.
So given that, you can imagine that the market moves very differently. The reasons why it, for instance, did this yesterday, most likely were a lot of stops got triggered and a lot of deleveraging was happening. And so these things are going to keep happening. We're going to be in this volatile situation for quite a while, probably for another year or two to come. But basically, let's wrap this up with a final verdict. Okay, final verdict is, for me, this is a good buying opportunity. Will we see a better buying opportunity potentially in a week or so? Yeah, absolutely possible. But do I know it will happen? No. Do you know? You don't know either, right? And if you do, make a call today, and it spells true next week, then you're guessing and you got lucky, okay? Because I've seen people make stupid predictions all the time, and I think that's you deal with the tape that's in front of you. You have a buying opportunity, you think it's fair enough, you use that as a buying opportunity, and that's the way I operate. And everything else beyond that is really just mental masturbation. And let's not engage in that. Let's be productive and stick with the systems we have, and I think we should be okay.
Absolutely. And I guess, and then I'll give one more thought, and then it's that question. So, a lot of people that are asking, what do I do if there's going to be more volatility now that that's been, these things have been, introduced. All these different things people can do, these crazy things I call them, because they're highly speculative, and there's just, we don't have, we have this data sitting in front of us right now for this. So to an extent, we can, come up with these ideas of what might happen. And of course, that's one other thing we talked about. There are so many. So what do you do? And the real answer to that is, it's all about knowing the probabilities of short-term, market dips or crashes, so that when it does go down, you know when to sell, when to buy, how much to buy, what coins to buy, and then you ride those back up. So you could make, you could make a career on nothing but that, right? Just, if you've seen that before, Michael, right, where people only buy on the downside and then just take that little gain, bank it, take that little gain, and just keep riding that up. And that's a lot what the microcap altcoin call is about. Sure, it's about coin picks, and it's about the big, big fast gains and everything, but it's also about knowing how to spot this yourself. Like Michael said, hey, if I'd have saw this before I went to bed, I could have guessed, because that really could have only
would have should have, though, right? I mean, that's always in retrospect, hindsight is always 20/20, right?
It is. So that's the other thing, is just knowing, the opportunity and being able to know when to buy the dip, because those are going to be always, your biggest gains. And one time they're going to be, and maybe more than one time, they're going to be like what we call life-changing gains. You're just not going to expect them, and they're going to pump. So that's all I had to say.
No, I think actually one more last thing, because you just mentioned seeing the opportunity. I think that's actually quite crucial again, because remember when before I started on my own long monologue here about all this, I said that majority of retail traders are not able, are incapable of seeing, of taking advantage of these deep retracements. And I think it's an inability to see the opportunity, and you are blinded to see the opportunity because you're blinded by fear, right? And so, let's not be blind by fear. That's where it is. Bitcoin is that, right? I'm sorry, let's type it in again here. Bitcoin USDT. That's what we know right now. Bitcoin at 47 and change. And it might drop a little bit lower if you want to play that. But that's what we know right now. And if you want to start accumulating, it may be a good policy. Take some risk assets, start accumulating. Yeah, maybe it's at 45 tomorrow. But today it's at 47 change, and that's not the worst time to buy. It's better to buy it here than at 67,000, right? And I think I'd leave it at that. I think that's the best assessment we can make at this point without making spurious predictions, which in the end may or may not spell true, and we would not do anyone any favors by doing that anyway.
Exactly.
Okay, I think that's a good time to wrap it up. Thanks if you made it all the way through here. Congratulations, you have the patience of a saint. And I'll see you guys soon, and I'll be in touch. Cheers.
Bye now.